Okay, today we start the class of business accounting, introduction to finance accounting. This is very basic of financial accounting, history of financial accounting, definition of accounting, accounting cycle, and elements of accounts. So, history of financial accounting is more than just. It's more than just a story of money and numbers. It's a story of the world evolution from bartering and local trade to a true global economy. So starting from barter, what you know about barter? Barter is exchange. If you want to buy, for example, want to buy water or drinking, you may exchange with my mineral water here. So this is what we call barter. It's not of the story of money and number only. Is more than that. Its written records are in the form of accounting written records. Written record meanings is we have everything is we have to write into the books. Okay. In the form of accounting document, they tell us what people ate, how monuments were created, how people made their living over the millennium. Today, financial accounting makes possible the vast international trade, economic growth of countries throughout the world. So this is very important of finance accounting. So you want to calculate the profit and the cost and everything in the world. So economy is governed by from the base of the financial accounting. What is definition of accounting? Is so you can highlight, identify, measuring, communicating economic information to permit informed judgment and decision. So first you can write into your books. First is identifying. This one you have to write using your pens in your books. Measuring. So you have to identify whether the money goes out, you spend is for expenses, for example, or for asset. You have to identify whether the money you spend is for spend or for assets. So further, I will discuss about what is the definition of expenses and assets. And then the second is measuring. Measuring, you have to measure in terms of RM, how much, how many, yeah. And then the third is communicating. Then you have to prepare all the necessaries into the books, and finally you have to prepare the financial statement. For example, I will discuss later. And then 4 is judgment and decision. Alright? Judgment and decision. You have to decide. Your company, you have to continue the business or you want to stop the business. If you look at the business is record the loss. For example, you record the business is occurred a loss. Then you want to decide whether you want to continue the business or you want to stop the business. So this is the judgment and decision you have to make, right? And then this is a definition of accounting. Accounting, this is accounting is system that identify, record, communicates, and to help user make decision. Information you have to share to users. Have to what the types or what is actually information should be. Information should be relevant, and then and second is reliable, and then the third information must be comparable. Relevant is relevant to the business. For example, you have two business. So this expenses should be in business A, and this is for relevant for business B. For example, you have the business of selling foods. Second is selling dress. Selling food, for example, you buy rice or oil or onions, all about the food. Then you have to relevantly our business of foods. And if you buy the dress code, for example, clothes, and then relevant to the dress business, then you have to relevant to the that business. Second, reliable. Reliable is what is a reliable? Reliable is boleh dipercayai. Okay? Reliable, relevant, berkaitan. Reliable is boleh dipercayai, is consistently rely. It's not tipu, it's not liar. Okay? Reliable. And then comparable. Comparable means your account can compare to the other business in the world, in Malaysia. For example, your business can be compared to other business. You want to compare the sale of the two business, then this is comparable. So the characteristic of information. Please say to me, Shah, what the three characteristics of the information should be? One is relevant. Second, you have to focus. So relevant, reliable, and comparable. The characteristic of information must be include of these three characteristic, that is relevant, reliable, and comparable. And then next is accounting cycle. Accounting cycle is we have 5 or 6 steps. First, you want to prepare the financial report or financial statement. So you can jot down financial report or statement. Please write financial report or financial statement. First, you need to get the source document. You have to make sure all the transaction must have source document, business document. For example, is invoice, receipt, bill, all these source document. And then next, after you get the source document, then transfer to journal. You have to record into the journal. That's why you have to buy or purchase the books of journal ready in the corporation, sell a journal books, and then record to ledger. After that, you have to prepare the trial balance, and then adjustment, and you have to prepare financial report. This is include for 5 weeks. We learn from we target after 5 weeks you have ready to to fulfill this cycle. That's why you have to make faster. And then accounting elements, please write into your books. We have 5 financial element, accounting elements or accounting types. Accounting elements, some say accounting types, some say accounting elements. For example, vehicle, brand of vehicle, or type of vehicle. Type of vehicle might be can be divided into the rail, right? And vehicle, rail, and then road vehicle, and then third is air vehicle. For example, for road is can be divided can divide into element of road, car, lorry, and motorcycle. The counting is some sort of this. Counting can be divided into 5. That is, one is you have divided. One is asset account. Second is liability. Third is owner equity. Fourth is revenue. And last is expenses. Okay, do it the same thing. So this is element of accounts. Elements of accounts. Then again you have to write again. You have to divide into 5. Asset. Second is liability. Third is equity or capital. Fourth is revenue. Equity, right? Equity. And then is expenses. Okay. So can get further. Asset can be divided again. Or next divided is asset can be divided into the fixed asset, and then current asset. Or fixed asset can be also known as non-current asset. Liability can be divided into 2 is right, good, long-term liability, and then this is a current liability. So you can check to notes of 1.5 accounting elements into your text. Accounting element to your notes. The text that I have already given to you. Accounting element, asset. What is asset actually? Asset is harta. What is harta? Asset that you own, right? You have the owner, not your parents' owner, not your mother or your father own. Your owner, you as your owner, or business owner. So then you have to create the business owner, the business enterprise. Then the business have their own asset. So this called this asset account. For example, you have your asset, but you also have the business. For example, you have to declare your asset is not your own anymore. It belong to the business. Then you have to transfer names to your business. Alright. For example, you have laptop. Now you're using for your own, as a student. But if you have the business, then you just transfer that laptop. Then you are not have the authority or ownership of that laptop. The laptop is owned by your business, so you don't have to right to use the laptop. That's why you have to transfer the name to your business. Okay. So we have to can divide the asset into this fixed asset and the current asset. So fixed asset also known as the non-current asset. This is current asset, and then for fixed asset is also known as non-current asset. Alright, current asset, non-current asset. It's not current asset. Fixed asset is not current asset. Actually, this is a fixed asset that because of why we don't use the fixed asset anymore right now, because of the fixed asset is difficult to identify. For example, you have an asset that's very, for example you have a Siti Nurhaliza. Siti Nurhaliza is ada nama baik kan, ada nama lah, sebarang ada nama Siti Nurhaliza tu, kalau you buat TikTok memang banyak followers dia. So this is what we call trademark or goodwill. This is considered, you do not know how to put the Siti Nurhaliza goodwill into the current asset or fixed asset. That's why all the other than current asset is called non-current asset. Fixed asset, contoh fixed asset ialah apa? Contoh fixed asset ialah ni equipment yang awak nampak ni, as you can see, and you have a physical. For example, desk, laptop, LAN, all this. For example, this you can see the yang awak print out ni chart of account here, so you can see the asset letak asset semasa. So yang ni lah, ini baru nampak. This is a list of accounts. You can see later. Alright. Please do not look to your iPhone. I will give you the time if you want to see to answer the questions after this. Okay. Alright. So asset is can be divided into fixed asset and current asset. What is fixed asset? What is fixed asset? Fixed asset is the permanently, physically, ini fixed asset yang nampak, yang berharap. This is fixed asset. Current asset is current asset. It's also your own. You have your own new asset order, but it's not dia tak boleh tahan lama. Contohnya duit awak, for example your cash. Your cash can be stay how long? Tak lama, just one or 2 months. The value of asset can be reduced. Whenever you have 1,000, after 1 month, your money can be reduced into 500 or 400. It's easily can be reduced. Okay. So fixed asset ada nampak vehicle dia and tahanlah lama, sementara but current asset is not, the life is not too long. Okay, liability can be divided into long term liability and current liability. Liability is, what is liability? Liability is tanggungan. Kita punya hutang. I think all of everybody in Malaysia, for example teenagers or people in Malaysia, except the babies and the student, all everybody have their liability. hutang dengan kawan ke, hutang dengan bank, you owe to banks, and you owe to the your friends, your sibling, your family. So that is the liability. So liability, for example, you have owe to PTPTN, NYPJ, that is your liability. Okay. For example, PTPTN is liability for company. For example, you as a company, then the PTPTN is the liability of you, of your company. Alright. So this is a liability you owe some money to from the others. Alright, this is liability. Liability can be divided into two. First is long term. Long term is, what is long term? You have to pay more than 1 year. For example, 20 years. You buy motorcycle, you have to pay 5 years. You buy a vehicle, for example, a car, you have to pay about 9 years. You buy a house, you have to pay 30 years. That is long-term liability. Your liability to pay every month throughout 30 years. That is a liability. This is a long-term liability. And owner equity is very, very difficult. That for the moment, you have to understand that owner equity just the capital that you put in the start of the business. Mula-mula berniaga, owner equity is all the assets, and liability start your business. Asset is equal to liability plus equity. So equity is equal to asset minus liability. Okay. When start your business, you have to have the money and also the loan, right? For example, you want to start a business, you have some amount of money, 10,000, but the money is not enough. You have to make a loan from the bank to buy, for example, van. That's why the capital at that time is consists of asset and liability that you owe, right? You liable to. So for your sake, for your purpose, for a student, capital is the asset and liability when you start the business, first day of the business. That is the capital. When you start the business activities, then if you do not think more than that. You have to think that capital is the first day start the business, that you prepare all everything in order to business can start. Right? This is the equity. And then revenue. What is the revenue? What is the revenue? Revenue is hasil. Alright, hasil. For example, you have ready asset, liability, all everything, capital, then your business will start. You start to start the business. Yeah? It's now ready to start. Then you can capture, you can get the sales, activities, business, then you earn the revenue. That revenue, for example, sales is considered under revenue. Alright? Cash inflow. You get the money from the activity of sale, then that is called revenue. Revenue is activity of the business, then you get the money, or you get the orang berhutang dengan awak. Yeah. And then for example, say just receive, all the word of receive, all these categorized under the revenue. For example, you have a room or vacant house You rented for others. Then what we call, the people rent your house have to pay the rental. Then you get the rental receipt every month. The rental you receive called the rental receipt. That is our income or revenue. Revenue can be called also as income. Alright? And then expenses. What is expenses? Expenses is the money out. Revenue is money in, flow in, and expenses is money out, goes out. In business activity, we are saying about the business activity. First, this is the start of your business. For example, today is 4th of September. Then you start the business today. Then all the activities is starting here, revenue, and also the expenses along the year. Okay, expenses, when you start the business, you get the revenue, and also you incur the expenses. You have to use your money to pay something. For example, you want to sell burger. You have to pay the oil or the salary of the staff. That is the expenses. Expenses is all is burn. Expenses is burn. You have to write larger font. You use larger font. Burn. All the expenses is burn. The money is burn. You know. For example, you buy the food. You eat the food, and then your money that you take out is burn. Because of the kebakar habis. This is expenses. Actually, all the money goes out, and the money is burned is considered expenses. Rather than you buy asset, you use the money, but the asset is here, not burned. But expenses burned actually. It's burned. It's very you have to what we call very particular using your money to burst the expenses. But expenses is very important. If you do not spend, then you do not get the sales. For example, you as a student, you have to makan, tuang minyak dan sebagainya to spend money for books. Alright? All the expenses burn, but in return you get the revenue. Alright? Okay, that's right. With that, I think this is today for first chapter is finished. Where